On behalf of Charity Can, thank you very much for joining us today. We're pleased to host this session. My name is Robert Fedderson. I'm going to be your host for today. I'm also going to be facilitating the Q&A at the end of the discussion. We've scheduled a full hour today, and we have tons of dedicated time for your questions at the end. So if you'd like to submit a question to the chat, we'll hold things off till the end. Or if it's very timely, I might interrupt Mike and encourage him to divert a little bit. We're joined by someone today who operates fluently in the intersection of wealth management and philanthropy. Mike Todd brings extensive experience to the world of donor-advised funds, and that's what we're here to learn about today. Without further ado, I think I'm going to kick things off to Mike. He will be better able than I will be to explain what he's going to talk about today. Mike, thanks a lot for being here. I know we're all really looking forward to this discussion.
Great, thank you, Robert. It's a pleasure to be here. I'm excited to talk about this today. Those of you who know me know that I'm excited to talk about donor advised funds all the time, but I think in particular, it's exciting times. The world is changing, and this is becoming a more important issue. So I'm going to jump right in and share my screen, hopefully, and then we'll get started. All right, Robert, can you see that?
Yes, I sure can. Looks great, Mike.
Awesome, thank you. I'm always nervous about that. Anyway, yeah. So thank you again for being here. I think the fact that there's so many here, I mean, makes me very excited, but it doesn't shock me, and I'm basing that on the number of calls that I'm receiving these days from folks who are saying a couple of things sort of similar. They're saying, you know what, these donor advised funds, we've never really paid a lot of attention to them. I think there's something important going on here, and we need to learn. Or I had one very recently, and I love this call, and it was simply, look, we're still not sure how we feel about donor advised funds, but I have this nagging feeling that we're missing an opportunity. And I thought that was fantastic. I can work with that. So whatever the reason, I'm glad you're here. As Robert said, if you have questions, throw them in the chat. If it's important and timely, then he will interrupt me, and I love that. That's fine. And we've also saved some time at the end for that. So let's get started. Okay, we are definitely going to move fast. I want to be able to give you information that you can actually use. And some of this, quite honestly, is new. I've got slides in my deck that are brand new for me. The ink's still wet on them, as it were. And my thinking is really changing about the donor advised funds. So you're going to hear some of that today. One other word, I do quote some American data. They are more than 20 times the DAF market in the US than we are here. Down there, most recently, $356 billion US, which is getting very close to $500 billion Canadian, versus our 16 billion roughly in Canada. So much, much bigger. But the key is that we trend in the same direction, and that's very important, and the data is proving that out. So when I do talk about some of these numbers, some of the trends, I'm referencing American reports, but they do apply here as well. We are going to move fast, as I said. The point here is really about how can your organization benefit? How can you get in front of this change and be able to garner more donor advised fund grants? That's the name of the game. But the world is changing, and therefore so is fundraising. Well, okay, what change? Here's the world that we are all used to. It's been this way for a long time. Donor donates to a charity. Easy. It's the way it used to be, at least as far as working with individual donors. But now it's looking increasingly like this. The donor may be working with an advisor who then invests the assets, and they are managed by the DAF sponsor. And then ultimately they get to the charity. And we're going to talk a lot more about this. But the point is that the DAF is not just another way to pay. It's not just another payment option, credit cards, securities, DAFs. They are that, but they're more than that. and they really do represent a structural shift in how philanthropic capital moves. You know, if you've ever wondered why DAF's donors sometimes feel harder to reach, or they're less visible, or they're more complex, it's because the structure of giving in Canada and the US and the UK and elsewhere has changed. And I'm going to introduce a term to you here. We are now operating in an intermediated environment, and that's important, intermediated. And this is new for me too. We're now working with intermediated capital, and that's a new term. So intermediate capital requires informed intermediaries. That would make sense. So now intermediaries put themselves at risk if they don't understand this new environment. And we'll talk quickly about who those intermediaries are, but I'll give you a hint. Your organization is one of them. And to do that, I want to talk about the DAF ecosystem just really quickly. This is a model that I came up with because it was really starting to bother me around how we were thinking of DAFs and how it was, you know, the DAFs only worried about the donors and the charities only worried about the assets coming in. So the ecosystem really helped clarify for me. And this is a much longer conversation, but you can see that I have the DAF in the middle, not because it's the most important part of it, but because it really is the hub. And you've got the donor, the charity, and the advisor. There may be philanthropic advisors, maybe the accountant is involved as well. But the lines between these boxes represent relationships, and some of them may be new. And the idea that charities and advisors are in relationship, or can be, or perhaps should be, might be new thinking. But let's move on. So what does this mean for charities? This is no longer a special case. You know, you may have just received a handful of DAF grants and you think, well, this is interesting, but it's not important because they're just little one-offs. This is rapidly becoming a standard channel of payment. It's the fastest growing way to give in this country. What other interesting point I'm going to introduce today in particular is the fact that the donor may not be the only one who is involved in the decision making, or at least is involved in influencing where the grant ultimately goes. And that's very important. And if that's the case, well, then stewardship's got to extend just beyond the donor and just beyond the thank you letter and then slipping them into your normal stewardship flow. It's different. And if advisors are DAF sponsors, and DAF sponsors are part of the ecosystem, and they are, whether we engage them or not, that's the question. You can ignore them if you want, but I think there's problems with that strategy. So this is the ecosystem. Understanding this is going to benefit your work and the results, and it will also benefit your donor relationships. And it's not just about chasing advisors. I often get questions about how do we work with advisors, and it's a good question, but it's not just about that. It's about recognizing that more actors may influence whether capital flows towards your organization or somewhere else. And if you understand that, you can operate more effectively inside the system. Understanding this obviously improves your standing. If you're part of an ecosystem, you want to understand it, and that makes you a more important part of the ecosystem. All right, and here's the interesting point, and I don't want to belabor this, but I find this really fascinating, but I can also go down rabbit holes a little bit, so I'll try not to beat this to death. The old days, donor gives to charity. The donor deploys the capital to the charity. Now, the capital is already deployed, if you will, before you get there. The donor decides intent. Hey, the donor says, listen, I'm a generous person. I want to be able to give to the causes that are important to me, and I'm going to donate capital to do that. The advisor then structures the assets. They'll open up a donor advised fund for the donor, and then they steward the assets. They invest them and they grow. The DAF sponsor, and we'll talk about that term in a little bit, the DAF sponsor governs and administers the funds, and then the charity utilizes the capital for impact. But you can see how it was deployed well above the charity line at the end of this diagram. So your organization, as I said, would benefit from understanding this ecosystem and for coming up with strategies for engaging the other members where it makes sense. I'm not trying to tell you that your work has just increased fourfold. That's not the case. But where it makes sense, you want to be able to incorporate these folks into your thinking and also into your approach with the donor. The rules of this thing that we do called fundraising have not changed, but the number of players has increased. And we need to be prepared for that. That's kind of the bottom line. There's more of us involved than we may have thought. If you want more DAF grants, then you should be visible throughout the deployment stage. And that's a kind of a fuzzy term, but I love that word, deployment. And the 4 points above, that's the deployment stage. And so you want to be visible. You don't necessarily have to know everyone. You don't necessarily have to be in deep relationship with them, but you want to understand the ecosystem. You want to know who's involved, and you want to be easily visible to them, not just at the end when you actually receive the grants. Okay, that's the context, and that's some really new thinking on my part, and I think it's fascinating and exciting, and it does change the game, changes the number of players involved, as I said. But I think it's very manageable, and hopefully what I want to do is get this across in what else I have to say here. So that's the context, that's the way the game has changed. So the DAF ecosystem represents intermediated capital. That's where we need to continue. You may be thinking, oh, okay, these are fancy words and ideas, but I'm not really clear on how the DAF itself functions, and that's great. Let's focus on that for a couple of minutes. And then we can talk tactics, as in how are you actually going to accomplish getting more grants from DAFs. So the donor advised fund, if you're not really clear on the definition, it's a giving tool, it's a giving vehicle, sometimes referred to. It's administered by a registered charity. So all DAF sponsors are charities, often foundations, but not exclusively. And it allows the donor to donate capital today, enjoy the tax benefit, get the receipt today, and then over time, they can make recommendations on where those assets go, the deployment of the capital, to use my fancy words. And we use the word recommendation carefully. It's an interesting problem where, not really a problem, but it's a challenge where the donor receives their tax receipt when they make that initial donation. And as far as CRA is concerned, well, they're out of the equation, and they certainly have no more control over the assets. And that's true. They have made an irrevocable donation to the charity managing the DAF. But they have what are sometimes referred to as advisory privileges, where they can say to the charity over time, listen, I would like you to send $10,000 to charity XYZ. And they can take as long as they want to do that. They can do it as quickly as they want, depending on the DAF, of course. But it's already been receipted. It's not theirs any longer. So we talk about donor advised funds, not donor instructed funds. You can't give instructions on what's no longer yours. But obviously the charity offering the DAF is in the business of allowing donors to make recommendations. So don't let the words throw you, but it's good to understand why they are functioning this way. And how does it work? I'm a very visual thinker, I must admit. So I like pictures, and it really helps me understand things. So you have a donor on the left. They're putting their capital into a donor advised fund and ultimately goes to charity, as I just said. The donor advised fund itself is often two different accounts, either literally or figuratively. So on one side, we have the investment account because we want these assets to continue to grow while the donor is making decisions about where it should go. And then when it comes time to issue a grant to your organization, the investment advisor sells a little bit of the investments, raises cash, and then the cash goes out. So there really are two different sides to this diagram. And that's important, and we're going to expand on that just a little bit. I love to draw the line. I love to open up the space because I want to create a gap because these are two separate parts of the equation, if you will. And we'll talk about that more in a minute. But just keep in mind now, we're talking about generally two separate processes, two separate, I don't want to use the word transactions, but two separate equations where money goes in, that's a donation, money goes out, that's a grant. And there's time and a type that separate those two things. And we'll, as I said, we'll talk more about that in a minute, but let's just focus for a second on these donor advised funds sponsors, if you will, the DAF intermediaries. And this is just, trust me, this is just a representative sample. We can argue about how many donor advised funds there are in Canada. There are hundreds, but they tend to break down in a couple of different categories. And I wanted to touch on this. Now, some of these names may be familiar to you. You can see Aqueduct, that's Scotia. You can see the Vancouver Foundation. Well, there's a community foundation. You can see a Benefaction and GiveWise. Those are independents. There's a number of different categories. We can group them together loosely into four. Don't take it too seriously. It's not, everybody doesn't fit exclusively into one of these, but generally when you're thinking about them, you've got the bank affiliated DAFs, and I mentioned Aqueduct. So that's Scotia, as I said. So most banks have their own wealth divisions, and then they offer the DAF. So bank wealth affiliated, you have the independent wealth affiliated, somebody like a Raymond James or a Nicola Wealth. Those are not owned by banks, but they are wealth firms, and they have their own DAFs. Community foundations, I mentioned, I showed you Vancouver Foundation. They very often, not always, but most community foundations have a donor advised fund as part of their service offering. It would be one fund type out of potentially many. And then you have the true independents. So sometimes they're called commercial, and as I said, like a GiveWise or a Benefaction, not affiliated with any particular wealth firm. They offer DAFs to anybody who's interested. So it's easy to group them and get a sense of what's behind that DAF grant when it comes in the door. Very, very quickly, and I won't focus on this too much, but I want to touch on the benefits to the donor. Why do donors use DAFs? Why is it the fastest growing way to give in Canada, as I said, in the US and the UK as well? What's in it for them, if you will? And I don't want to go through each one in detail, but it streamlines the giving dramatically, absolutely. The donor can donate, not when you've asked them for a grant, but when they have the funds available. They can set up, in some cases, automatic donations. They can even, in some cases with the digital DAFs, they can set up multiple automatic grants. And the charitable dollars are invested and grown tax-free, as we said earlier. So that allows the pool to grow even after it's been donated. And generally, they're easy to set up. It can be done very quickly. Some would accept complex assets. That's a vague term, but it can be anything beyond what we would consider cash. So cash, checks, etc. But you can donate securities, you can donate insurance policies, you can donate land, even art. I once heard, my favorite story was someone who donated $1 million whiskey collection, which I thought was pretty good. And I would have loved to have been involved with trying to evaluate that collection. Basically, if it's an asset that can be professionally and reliably appraised, and that's the key. CRA wants to know that this is a serious amount that the tax receipt is being issued for. If it can be professionally appraised, it can likely be donated. Now, not all DAFs are going to accept all of those different asset classes, but it's possible. The DAF can involve family. You can involve your kids. It's cost effective when compared with a private foundation. And that is a whole other conversation that's a lengthy exploration of why you would want a DAF versus a private foundation, or perhaps both. And that's conversation for another day, but just keep that in mind. And it also gives the donor the ability to work with their trusted wealth advisor in a lot of cases, not all cases, but often the donor can continue to work with their investment advisor and just go on with, I've got my RSP, I have my investment account, and I have and keep in mind, my warnings about it's no longer your asset, but I'm going to consider it my donor advised fund, and I could talk to my advisor about it. So very, very important distinction. So those are some of the reasons why the donor benefits from using a donor advised fund. And it's just some, like I said, and we could go into much more deep analysis of why this makes sense. But there are lots of reasons, is the way I would put it, for a donor to do this. Okay, let's go back to my model here, because I want to talk a little bit about how DAFs get funded. And this is important from your perspective, because you want to make sure that there is capital that has been deployed and is available for grants. All right, and in order to explain this, I'm going to tell you a story. I want to tell you about my very favorite DAF meeting ever. And this took place a number of years ago now, when I was working with Charitable Impact, a donor advised fund, and working with financial advisors and their clients dominantly. And I got a call one day from an advisor who I really respected and liked, and we had a great relationship, enjoyed working with him. And he said, Mike, we love the donor advised fund. The clients, and he mentioned one of their clients that loves their donor advised fund, and I knew them well. He said, but I just got a call from their accountant, and he doesn't get it. He doesn't understand what the DAF is. He doesn't understand why we're doing this. So he said, can you come over and explain this to the account? I'm going to put this diagram back up so it might make more sense. And so he said, can you come over and talk about it? So I went over and we had a meeting, and the advisor was there. The donors, there were two of them were there, and the accountant was there. And I also brought another colleague from Charitable Impact who was a philanthropic advisor and was helping the donor with their actual charity selections, which some DAFs will do. And that's an important distinction. So we went over, and the advisor said, Mike, Joe here, I'm making up a name, doesn't get it. Can you explain to him about the DAF and why we love it so much? So I started to walk through it and just walk through the process and what was involved, and basically describing this diagram. And about halfway through it, he stopped me. He said, Mike, okay, stop talking. I think I understand what this is. Let me tell you what I think it is. And he turned to the donors, his accounting clients, and he said, every year, as you know, and this was a high net worth family bordering on ultra high net worth. It was a large, it was a 6-figure plus DAF, so it was significant. But the concepts here apply to a DAF of any size. He said, every year, as you know, we get to about April, and I do a rough back of the napkin calculation on taxes owed this year. Well, what's going to happen now is every year I can say to you, pointing to the donors, I need a tax receipt to help mitigate your taxes. I need a receipt for about $200,000, just making up a number. I need a $200,000 tax receipt. And he'd been doing this for years, but that was the end of the discussion. He didn't care or know where that receipt was coming from, how it was generated. He just said, get me a receipt and it'll help with the taxes. But now he said to the donors, here's what we're going to do. I'm still going to do that. I'm still going to say to you, I need a tax receipt for X number of dollars. And then he turned to the advisor and he pointed to him and he said, and your job is going to be to help choose the securities that they're going to put into their DAF to generate that receipt. We want to make sure we're optimizing capital gains and eliminating as much as we can from taxes owed, and giving away the securities that are the highest price at this point. And then he turned to my colleague, the philanthropic advisor, and he said, your job is going to be to work with the donors and make sure that they're getting the impact and getting the gratification, that they feel good about their giving, and they're getting the biggest bang for the bucks, and you're going to help them sort out where to give it and how to give it and the work that they want to do. And then he stopped and he looked at me and he cracked this joke about how he didn't know why I was there, because clearly I didn't have a job, but we carried on anyway. So he got it. And what's more, he now has this tool that he will revisit every year, every April. What's the number? Oh, I need a receipt. 200 this year, 300 next year, 50,000 the year after. It doesn't really matter. They've got this mechanism that they will continue to use on side number one, of course, generating that tax receipt for the client. They need the receipt, and they're generous people. They're going to give these funds away anyway, but this way they're optimizing their tax situation. So it was a fantastic meeting. I really enjoyed it. And the light kind of went on for me. I mean, I knew this intuitively, but the way the accountant grasped it and explained it made perfect sense. And I thought it was a fantastic illustration. So this model is separated, as I said earlier, down the middle, in time, and also by type of donation. I said already, this is a donation on the left, number one. It's a grant on the right, number two. That's the reason why you don't issue tax receipts when you receive DAF grants, because it was done when the donation was originally made. But the concept of being separated in time, I think, is important to point out for charities. I sometimes get responses from charities saying, you know what, this is you're just getting in the way. You're getting, one of my favorite lines, you're getting between me and my donors. And you're just causing problems. You're adding friction. The money should have just come straight to us. And the concept that this is separated in time, I think, is important. You know, the other example, using this mechanism, I want to share one more quick story, super quick, on why this is important. It was a different advisor, different donor, also six-figure DAF. And I remember speaking with the fundraiser from the charity that the donor liked to support in particular, and they made that comment, this money should have just come to us. You're in the way. And I explained to them what had actually happened. This donor was high net worth, as I said. They owned a company. They were very generous, and they were giving away, on average-ish, $100,000 a year. You know, it wasn't a target, it wasn't a goal. It may have been one donation, 5 donations, depending on the year, but generally they're giving away about $100,000 a year. And they just sold their company. So as a result of that, they were flush with cash and also had a huge tax bill to pay, which is problematic. So what happened? The accountant, the advisor, and I was involved on the periphery of this conversation, sat down, and they decided they were going to take $1 million out of one of their investment accounts and put it in the DAF. So inside number one. Great, $1 million tax receipt, give it to the accountant, you go do your thing with the taxes. Well, what do they effectively do? They effectively pre-funded their $100,000 a year for the next 10 years. And handled an immediate tax problem. And so I said politely to the fundraiser, listen, that $1 million in their DAF was never coming to you. You're going to get your allotment every year because they love what you do and they want to continue to support you. But there is no correlation, and this is the point I want to make, there is no correlation between the timing of the donations that happen on side number one and the grants that happen on side number two, either in amount or in timing. So no correlation. It's completely different. So when is the best time for this person to put assets into their DAF? And as I said earlier, I think it's not when you're asking them for a donation, a grant. It's when they, A, have the assets or the cash, and B, could use the tax receipt. I know I'm giving away this money every year anyway, so I want to time this in effect so that I maximize my tax benefit and I maximize the fact that I've actually got this. It may be gone next week, but I've got it now. I want to donate it. So I know I'm beating a dead horse here in a sense, but I really, really want to emphasize that there's no correlation between timing and amount on the left side and the right side. So that's why when you find out who has a DAF, that's gold. That potentially is gold because you have found somebody who has literally already given away the money, and they've dealt with the separation anxiety of writing that check or donating those assets. And now they have this pool that can only go one direction. It can only go to charity. They can never have it back. And so it's something that is, in effect, I think it's made the, I don't want to use the word easy, but I'll say it anyway. It's made the fundraising job easier somewhat with this particular donor, because the reality is, I think fundraising is the hardest job in the world. I really do. And I deeply respect people who do it. I could not do it. I think you've got two tasks. One is you have to convince me to part with some of my hard-earned cash. That's a challenge. That's not necessarily a fun conversation. And the second task is you want that cash to go to your organization, and rightly so. So two bridges you have to cross. The first one, it might be a little bit uncomfortable. The second one is happier because it's all about the donor's intention. It's about values alignment, mission alignment, etc. All the things that you're good at doing is talking about your organization and the work you're doing and the people you're helping, the impact. Well, with the donor advised fund, I've already given away the money. As I said, I donated, or this donor had donated it last week, last month, last year, whenever the time was, because that's when they had it and that's when they needed, ideally, the tax receipt. So it's no longer theirs, it's already gone. And now I can issue a grant to you, and listen to my words carefully. It's not literally, but it's like it doesn't cost me a penny because it's not my money anymore anyway. And as I said, I've dealt with the pain of giving it away last time or whenever I funded that DAF. And that's why a couple things will come up in a little bit in some slides, why people are more generous with their DAF. And that's especially why this is important to you and your organization. And it's vital to start to be able to figure out who has DAFs, or at least to start to attract them. And that's a lot of the work that I do these days, is helping people, organizations become DAF attractive. Anyway, you've been staring at this screen for too long, so let's move on and start talking about some of these practical tactics that you can adopt in order to benefit from this. Before we do that, though, I want to talk a little bit about the concept of anonymity. And this is important because a lot of fundraisers, I say, listen, every single DAF grant we get is anonymous. And I don't know about you, perhaps you've been in a room, I recall a CAGP conference a few years ago where it got a little testy, where somebody said that every grant we get is anonymous. And one of the DAF sponsors stood up and said, nope, less than 5% of DAF grants we issue are anonymous. I remember that. And that is technically correct. Less than 5%, and it's pretty universal, are intended to be anonymous, where the donor says, I don't want anybody to know, including the charity. Well, how is this sort of disagreement possible? And let me tell you a secret, and my DAF friends might not be happy that I'm telling you this, because you'll respond accordingly. Yes, less than 5% are technically anonymous. However, generally, when you issue a DAF grant, if you've got a DAF, you can do one of three things. Give them all my name and my email address, in other words, all my information. You can say, I want to issue this grant in fund name only, and that's important. And for a lot of DAFs, you get to make up a name. You can call it the Mike Todd Family Fund. And you can also issue grants, as I said, just saying it comes from the Mike Todd Family Fund. Or you can elect for true anonymity, and that's a very low number. The problem is with the fund name only, with those folks in the middle. If I call my DAF the Mike Todd Family Fund, well, that's useful. You'll see the words Mike Todd when you get the grant, and you can check your database, see if I'm an existing donor. You can do some sleuthing to figure out who is Mike Todd, and you more or less likely to find me. But what if I called my DAF the Sunny Day Fund? And my argument with my DAF friends now is, listen, if I call my DAF the Sunny Day Fund, that is effectively anonymous. From your perspective, from the charity's perspective, the Sunny Day Fund does not tell me anything about who this person is. And I really want to understand and thank and steward, more importantly, the donor. And I can't do that if it's the Sunny Day Fund. So all that to say, true anonymity, very, very low. If it's fund name only, it could be helpful. It could perhaps not be helpful. And if you're ever in a room and somebody says less than 5% of DAF grants are issued as anonymous ones, just push back and say, you know what, that's not relevant anymore. It really isn't. And I've said that to my friends too. It's not a bad thing the way it works, but it's not helpful to say that less than 5%, because you, the receiving organization, I think you get to decide what the definition of anonymity is. And the Sunny Day Fund, as I said, is probably pretty close to being anonymous. So, all right, then what do we do with this? And the best thing you can possibly do is get people to tell you they have DAFs. I'm pretty sure you've probably got somebody in your donor base already supporting you, loves your work, who has a DAF. You may not know who they are, or you may see, maybe they're writing you checks. And I'm going to explain why they would do that in a minute, even if they have a donor advised fund. But getting people to self-identify, getting them to put their hands up and say, I have a DAF, whether they're donors of yours already or prospects, you want that to know that information. And we'll talk a little bit more about why that is so vital. But you want to get them to self-identify. I love that term. Okay, so how do we do that? It doesn't sound very easy. Well, remembering that it is more than just a different form of payment, and we'll expand on that. My first bullet point seems kind of silly, but it's the most important, and that is ask. Ask everybody. Ask in your newsletter. Ask when you're prospecting. Everywhere, ask, do you have a donor advised fund? Now, because it's still a relatively low number of people who do, and I say relatively because it is the fastest growing and it's just on a rocket ship, really starting, the curve is getting steeper and steeper, I should say. So ask everybody, do you have a donor advised fund? 9 times out of 10, somebody will look at you and say, I don't even know what that is. And then you have an opportunity, if you wish, to educate them. But you can just say, well, it's a particular way to give to charities, and we just want to make sure we know when people are doing that. So ask all the time, everybody. Secondly, use the words donor advised fund everywhere. And this is a real pet peeve of mine. I'll try not to get on my soapbox, but this really gets under my skin. On your website, absolutely. You've all got websites. You all have the capacity for online donations. And in many, many cases, you even call that page Ways to Give, where you say, okay, here's the box to give through Canada Helps. Here is an explanation of giving securities and perhaps our transfer form. It's Ways to Give. And that is so important because, and I did not understand this until a couple of years ago when I had some conversations with a couple of donors. And then I confirmed this with a number of friends at donor advised funds. I remember my first conversation with a donor who said this to me. I literally just about fell off my chair, but it makes sense now. I was talking to someone who I knew fairly well, and I had helped them open up a DAF, and they loved it. They raved about their DAF. They weren't exactly super deep on what it was yet and what it could do, but they loved it. They loved the simplicity and the ease and the lack of friction. And so the donor was explaining to me, well, here's who we're supporting this year. And then he said to me, it was super interesting. He said, of course, I still have to write a check to charity ABC. And I stopped him. I said, what are you talking about? You have a donor advised fund. He said, yeah, I know. But I looked on their website. I don't see the words donor advised fund anywhere. I have a great relationship with my fundraiser. We stay in touch. She's never used the words donor advised fund in conversation with me. And most importantly, they have a ways to give page, and donor advised fund is not there. And he just kind of looked at me, and I kind of said, so? And he said, Mike, it's the ways to give page. And it clicked for me. I mean, he was taking it literally. And you could, we could sit around and debate whether that's rational or not. I think it actually makes sense. But if donor advised fund is not on your ways to give page, some people come to the conclusion that they cannot give to you through their donor advised fund. And like I said, I went and checked. I got a good friend at a couple of different community foundations in particular, and I asked them, what do you think about this? And they said, oh, of course, yeah, absolutely. And they told me stories of donors who had said the same thing to them. Long way of saying, use the term, make yourself appear DAF literate and DAF attractive. You're literate first, and then you're going to start to attract the donor advised fund. And as I said earlier, in a different kind of way, if nothing else, you'll have people asking you, hey, what's that donor advised fund on your website? And people I work with, what we do is end up creating a one-pager that donors can click and download on what a DAF is. And that's really helpful in a lot of cases. So use the words everywhere. Most importantly, on your website, on your ways to give page, keeping in mind now, hopefully you're going to look at that and never look at it the same way again when you realize that ways to give sometimes is interpreted literally. Use it on obviously on your socials. You want to make sure that you're socializing the concept that this is, in this sense, just a different way to donate to you. And all your collateral. My favorite idea is, and I'm going to bring this up. Hold on, I'm gonna wait. I'm gonna go back to this page because I want to talk about the thing on the bottom here. This is my favorite idea. Your collateral, if you're still doing direct mail, why not? Is there a checkbox on the return portion? The donor can check it. Hey, please contact me. I prefer to give through my donor advised fund. That is incredibly valuable. Getting people to self-identify, as I said, it can be challenging. This is an easy way to do it. It can be incredibly valuable, and we'll talk about that in a minute. So there's lots of things like this you can do. My terms that I've used already, DAF literate and DAF attractive. You want to make sure you're doing that and you're being that. Okay, this part now is absolutely critical. Absolutely critical. I'm going to summarize it. Let me just bring all this up here. There's no scenario, even the truly fully anonymous DAF grants, where you don't have to thank the donor. And let me explain what I mean by that. If you get an anonymous one, send the acknowledgement to the DAF sponsor. And in Canada in particular, I've never had anybody tell me otherwise. Most of them will say, of course, we will pass that on to the donor. So if it's full information, hey, dear Mike, thanks so much. And it comes to me. If it's the way I described earlier, Dear Happy Day Fund, at least they're using what they've got. If it's anonymous, it's Dear Donor, but it will still get to them. And you can spend all sorts of time thinking about what you want to say in this acknowledgement that would encourage the donor to self-identify. Many of them don't realize what anonymity means when they elect to do a DAF grant anonymously. That's the truth. It's an interesting challenge. They don't realize that even you don't understand or don't get to see the information on who sent this. And so by sending the appropriately worded email, you're letting them realize, oh, wait, they don't know who I am. That's not what I wanted. And so they can reach out. But either way, thank them. Even if it truly was intended to be anonymous, you still want them to know that you're grateful for this and you thank them because you would like to steward them in whatever way you can and to encourage more gifts. Never ever send a Dear DAF sponsor because they'll go right into the circular filing cabinet. Even in Canada, where we do our best to let the donor know you've said thanks, you just don't want to address it to the DAF. They are cause agnostic. They want to make sure that the donor is reaching their impact, but they don't favor one charity over the other generally. So dear donor, even if it's fully anonymous, but never, ever, ever let a DAF grant go by without sending in a thank you and an acknowledgement, at least to the DAF sponsor. Okay, I have preached about that for enough. All right, it sounds like a lot of work, yeah, and it is, but is it worth it? And the answer to that question is a resounding yes, and we could talk about why. First of all, I've already said this a few times, the DAF is the fastest growing way to give in Canada. Fastest growing. This is where the donors are going. And so as a fundraising organization, you must meet them there. Two, and this is fascinating, and we could have a long conversation about why I think this is true. I'll skip that today, but it is true generally that when someone starts giving from a DAF, so if you have a current donor who switches to giving through a DAF, generally their annual giving increases by some number. Charity in the US talks about 96%. I've seen higher, I've seen lower, it doesn't matter. The reality is it drifts upward when they have a DAF. And if you want to know why I think that is, you can send me an email and I'd be happy to chat about that. But because of the time, we'll keep going. Now there's this. When you go shopping and purchase something, would you rather pay with this, your credit card, or would you rather pay with this, the gift card that you found in the bottom of the drawer in the kitchen? And everyone knows what I mean by that. When you find a gift card you've forgotten about, it's like free money. You found money and you run out and you use it. The DAF, in a kind of crude way, I can describe it this way, is like a gift card for charity. And that's because of what I said earlier. I gave the money away last year. It's like it's free. And I've got this loaded gift card that I can use. And we want to make sure that your organization is benefiting from that. Reason number three, donor retention when people use a DAF is generally 15% higher. And I'm not sure about this one, why, but I just think because they are no longer engaging in that you should give away money conversation, and now are only engaging with you on your mission, are we values aligned, et cetera, which is a fun, meaningful conversation. They tend to stick around longer and they make their choices seriously and with a lot of thought. And once they choose a charity to support, they generally stick with them. So a little bit higher retention when that happens. Okay, let's touch on summary here. And then we've got time, Robert, for questions. Donor advised funds are a very, very valuable tax planning and charitable giving tool. Remember the two sides? It's literally two sides. One side is the tax planning, one side is the charitable giving. For you, the donor advised fund is another form of payment and more, and that's referencing, the higher amounts and the higher retention, et cetera. So you've got to cover it off as just another form of payment, and you want to do that because it's not just another form of payment. It's a form of payment that donors tend to be more generous with. DAF donors, I sometimes say there's no such thing as a DAF donor. There are just donors who use a DAF. I'm not sure that's what I really want to say, but I find it useful. First and foremost, these folks are donors. So when you get a DAF grant, your number one priority is identifying the donor to the extent that you can, and then stewarding them. And that's critical. So don't get bogged down in, oh, this is coming from a foundation. That's not my concern. It's coming through a foundation, but there is somebody behind it at some point. So very, very important. Just another donor, just another form of payment, but it's more valuable, as we talked on. And the most important point, I think they're all important, but the last point I want to leave you with is once you have identified DAF donors in your CRM, and that's a whole other conversation around data, donor data when they use a DAF. I mean, I got to be honest, I can probably count on one hand the number of charities I have seen who have got this down pat when it comes to coding DAF grants. Because, well, yeah, but it came from GiveWise Foundation. Yeah, but it really came from Mike Todd. Like, how do you track this? And it's not really Mike Todd, because legally it's not his money, but he's the one who directed it. You can kind of get bogged down in worrying about that, but you need to be able to track both of those elements: GiveWise, Mike Todd, and then steward Mike Todd. And there's some value in trying to have a bit of a relationship with GiveWise as well. And that's other things that we could talk about. You could even make DAF specific asks. In fact, I tell my clients, listen, I want you to have a DAF specific campaign. And I remember somebody saying to me, we got two donors who use DAFs. I said, great. This campaign is going to focus on those two donors. They don't know it's only two. And you want to reference donor advised funds in your literature. And it's specifically for DAF folks. And you know, that's something that we could talk about. It's so important. I also say to people, if you receive a DAF grant, you jump into your calendar, and 6 months from now, you make sure you contact that donor again, because DAF donors tend to do reoccurring grants. So they seem to be open to giving more often from their DAF. So I guess the bottom line here is, you want to understand the DAF, and referencing my earlier comments at the beginning, you want to understand that we're living in an intermediated giving world, and what that means, and the relationships you want to be aware of and perhaps foster. And you want to make sure that you've got DAF specific strategies in place to make sure that you're capitalizing on the fastest growing way to give in Canada. And I do believe, you know, there's a whole other element that I haven't touched on. I'll tell you the term, and then we'll go from there. The thing that I think is most important in these days, quite frankly, because the world's gone a little crazy, is the element of recession-resistant giving. And I think in this, you know, in an ode to Mark Carney, I called it rupture-proof giving, but I often refer to it as recession-resistant giving. And that is because, again, I donated the assets sometime in the past. And I want you to imagine a conversation with your favorite donor. And it's, you know, I love you. I love your organization. I love your mission. We're mission aligned. We're values aligned. You know, I've been supporting you for 20 years. I just can't write you a check this year because I'm worried about the price of gas, the price of groceries, my job. I'm worried about politics, nudge, nudge. I'm sorry, I can't write the check, versus all the same things. I love you. I've been supporting you for years, and I'm worried about all these things too, but I have a DAF, so I can give you a grant out of my DAF, and it feels like it doesn't cost me a penny. And in that sense, it's recession resistant or recession proof, and it can be a volatility smoother, but that's a whole other presentation. I won't go on about that, but I do want to leave that thought with you. And Robert, I've gone over time, I think, but let's see if we could address any questions.
Hey, Mike, thanks for that. That was absolutely fantastic. And we do have a bunch of questions that have come through in the chat and the Q&A.
Okay.
Some of them are kind of on the same topic, I guess. So I'm going to try to streamline things so we can get through as much as possible.
Sure.
First off, we have questions about a disconnect between donors requesting funds to a specific charity and the DAF sponsor maybe not agreeing with the donor or suggesting another charity, like happened to one of the people in the comments. Do you have any commentary on that, Mike?
Yeah, that's an interesting one. I was going to say that doesn't really happen, but you said somebody's had this experience, so let's address it. There are, for instance, in the US, there are DAFs that are cause specific. So it might be an environmental DAF. And so you know that you're restricted to only giving to environmental charities through them. In Canada, they're much more general. I'm distressed to hear that somebody talked somebody into changing the charity they wanted to give to. Generally, DAFs are cause agnostic, which means they're not going to try to influence the donor. But as long as it's a duly registered charity with CRA, they should say yes. If they don't, quite honestly, I would just push back. I mean, unless that's indicated in their donor agreement that everybody says they have the right to do that. Nobody I know of would actually do it. So if it does happen, I would push back. and just say, listen, this is who I want to give to. Why can I not do that? And see what happens. It's unlikely, I guess is the word I'll use.
Perfect. And a couple other people had some follow-up comments about that, but I believe that was kind of
Mhm.
well covered in what you addressed there and in the chat as well. Thanks, Christine, in the chat for doing a lot of the heavy lifting for me. I really do appreciate that. So we've got a comment here. A donor makes a recommendation. Can the DAF manager then choose to agree or not agree with the recommendation?
Well, it's similar to my last answer. They shouldn't. It is a recommendation to keep CRA happy, but for all intents and purposes, you're telling the DAF, don't tell the lawyers I said that, but you're telling the DAF what to do with the money. And 99.9% of them that I'm aware of would say, okay, as long as it's registered and off it goes. So again, if you encounter resistance, I would push back. It is the property of the foundation. So they could say, no, we don't like them, but they'd be out of business as far as promoting DAFs overnight. So I really think that's an exceptional case that I would push back hard on. And I'd love to hear about it too, folks, if you encounter that.
And we have a question here that a few people have been talking about in the chat that I think is really important, about how charities can better establish relationships with DAF providers and sponsors. And I think that's something that we can all really take away from today that matters to everybody here a lot.
Yeah, it's a great question. And I remember doing some presentations where people say, hey, Mike, this is great. You're going to give us a list of DAF donors. No, I'm not. I can't even get those lists. They are cause agnostic. So they won't push the donor in any direction. But I know from experience, if I have a donor who says, look, I'm really worried about animal welfare, but there's 100 charities, which one should I support? I would gladly walk them through a process of trying to distill down 3 and then ultimately making them choose the one. I don't want to be the one to say, give to this charity, but I want to help them with that process. So most DAFs would see that as part of their responsibility and would help the donor come to a conclusion. But again, they don't have favorites. In that case, what I sometimes say to people is, listen, you want to have some semblance of a relationship with the DAF so that when I have those conversations with the DAF donor and help them, that you're top of mind. If you call them once a week and pester them, that's not going to work. That'll work against you. But you want to know somebody at the DAF who you can call when you have a problem or a question. You can call, because I refuse to take anonymous as an answer. So you can call and say, hey, just got this DAF grant. Who is it? And make them tell you, oh no, this one it was actually anonymous. So you want to know somebody there is my point. And that's helpful. They're not going to be your best friend, but it's helpful to know somebody by name that you can call. And that way you ensure that when those conversations are happening between the sponsor and a donor, hopefully your name, percolates to the top of the list.
Perfect. Thanks a lot for everything, Mike. I really appreciate you being here and the talk. Fantastic Q&A. Apologies if we couldn't get to everybody's question, but feel free to email me, Robert at charitycan.ca. I can pass it on to Mike if I can't handle it myself. Thanks again for taking the time, everybody. Mike, if you'd like any last words.
I just really appreciate the time. I appreciate the interest. I talk too much. I love talking about this subject. So if questions come to mind, you can reach out to Robert. You can reach out to me, Mike at transformphilanthropy.ca. I'm happy to address this. I love talking about this, and I would never send you away without an answer. So I appreciate your time today in particular. Thank you.
Bye, everybody.